Going on. Hey, Jack, welcome. Good to see you here too. And you are muted right now. So there we go. But anyway, it is great to have everybody here. We're going to get started here on Ask the Pros. It is 12 o'clock. Let's do it. We have had a lot of things going on in the market. This thing is relentless. I mean, we've had news, we've had the FOMC, we've had CPI, everything, and the market just keeps going up. So we got to find out what is going on, because there is a lot of risk in the market. It's feeling like pretty much, overbought up there. And we come back here week after week on Ask the Pros because we want to help you get on the right side of the market, show you the tools that we're using, the analysis that we use to do just that. And so I'm so excited that we have Jack Carter with us. Welcome, Jack.
Thank you.
Thank
you for having me on.
It works. And we've got Roger Scott with us. Welcome back, Roger. Good to see you here, Roger. And we've got Scott Welsh with us too. So let's get started. Just jump right in. So with all these things going on in the markets, guys, what do you think, in your opinion, is the best way to approach this mid-June market right now? And any comments that you have on any news events, go ahead and go with that too. Roger, let's start with you first.
Well, I think this market has been extremely confusing to most people because we're getting a lot of on one hand, from one part of the crowd, we got a recession coming. We're in a really bad shape. And on the other part, you've got a raging bull market in these AI tech stocks. So people are very confused right now. Some people are talking bull. We're in a new bull market. The truth is we're not. And once I do my segment and I'll show you the key levels, it's very, very hard for a bull market to be contained with a handful of stocks. So much more likely than not, this is going to be this is just a reversion of a trend, counter trend. We've seen counter trends give us more than 20% rallies before. It's happened before. It's not the first time. And remember, the markets are very volatile right now, which leads to that volatility. But when you look at, Celeste, when you look at these numbers, and I was just looking at this earlier a minute ago. I mean, just think about this for a minute. Nvidia is up 200% for the year. Apple is up 50%. Microsoft is up 45%. Alphabet is up 40%. Amazon is up 48%. Meta is up 125%, and Tesla is up 135%. That sounds to me like a shakeout ready to happen. There's absolute. I mean, these companies just laid off employees, and they don't know if they're going to be able to meet revenue for the next 3 quarters. But they're up 50, 100%. That's nonsense. So I think sooner than later the market's going to come back to earth, and that's when people are going to get a reality check. And I think right now, because the markets have very small short-term memories. Yes. And people go from bear to bull like that, which is great, but this is not a time to be a hero and a time to start putting your money into stocks, and heavy duty money into stocks, and start thinking that things are going to turn around, because we're just nowhere near there. This inflation is sticky, as I will talk about later in my analysis.
Oh, great. Yeah, I cannot wait to get to that part in your analysis there, Roger, because you're right. Like it's there might be a lot of people jumping in kind of at a top, and we'll find out some more on those levels and how to trade those accordingly. So Jack, let's jump to you. What are your thoughts on the best way to approach the markets right now, or any of the news events? What's on your mind?
I coined a new term the other day, so everybody knows what this is. This is the situation the market has. We got the guys that have the fear of missing out, the FOMO, and now we got the fogey, where you got the fear of getting in. And it's kind of like the opposite of a battle of bulls and bears. It's like, who wants to go first? And it's so, look at how the market's barely moving. Like, it's just like when you're looking at the top, it's like the Gulf of Mexico. You go out there every day. Sometimes you look at the top, nothing's happening. You look underneath 10 feet, there's a lot going on down there. And I'll show you. There's options that are trading like on Nvidia, like a $5 strike price call has open interest on it. I mean, I'll show you some of this stuff and just blow your mind. But yeah, that's what I'm thinking. We've got a battle of the FOMO versus the fogey.
I like that. I like that, Jack.
You know, I'll tell you the thing is too, is like I love to listen to people talking about the market. Not that I'm eavesdropping, but I was in Miami and you know the pool is packed and there's a lady on there talking about the AI stocks with her sister or something like that. And man, that's when you know, right?
That's when
When
you
it's
know.
That
trickled down to
oh
60-year-old ladies talking at the
Oh,
pool
yeah.
about AI. Oh man.
that's when you know, Jack. That's when
Oh,
you
yeah.
know. He what he just said is that's something an experienced trader will tell you.
Oh,
That I remember that works better than any indicator
You
that's
got it,
been
baby.
that's
Yeah.
been invented, that will be invented, and that
Yep.
has ever been invented.
The poolside chat. That's so,
Yep.
so that was telling me, you know, I stood up. I wanted to go upstairs and sell all my Nvidia because
Exactly.
typically that's the indicator, you
Yeah.
know, but we'll see. It's really crazy. It is just what's happening in the options market and what's happening in the market is it's very narrow, you know, it's not broad at all. It's narrow. So last little thing I'll leave you with is buckle up, Buttercup, because we're going to have some serious volatility coming up.
Oh, well, I think
Big
with
time.
that, we can all just end the show here at Ask the Pros and go get ready for some trading. So that's phenomenal. I love that. Fogey, fear of getting in. That's hilarious.
Yeah,
Buckle up,
fear of
Buttercup.
missing out. You know, it's weird. It's weird.
Yeah, it is weird. It is weird, but it is weird. But you know what? I bet you guys feel very prepared for it, you know, and very strategized, ready to jump on whatever the opportunity is, up or down. And you are not at all afraid to get in and put your money where your mouth is. So I appreciate that about all of you. Scott, let's hear from you. What are your thoughts about, you know, all this humble jumble going on here in the middle of June?
A lot going on. Couple things you should know though about me is that number one, I'm a rules-based trader. I'm either an algo trader or if I'm discretionary, I follow rules. I follow rules or people die, like they said in Few Good Men. So keep that in mind. But in my heart and in my soul, I thought the Fed meeting was the day that everything was going down. You know, I'm long. I don't have a single short position. And I'm up big in a couple of positions that I just think are ridiculous. I mean, I'm sitting on nice profits and every day I'm waiting for the other shoe to drop or even the first shoe to drop. But I thought the Fed meeting was going to be it. You know, I thought they're going to come out and they're going to say something hawkish and bloop, there it goes. And they were kind of hawkish and nothing happened. So honestly, I'm just like you said, Celeste, I'm prepared. I'm fully ready for all of this to end today or tomorrow, but I'm following my rules still, and I'm going to follow it as long as it wants to say silly. I'm going to be there.
Exactly. Silly is good. We can make money on silly because that's the point. I mean, there's so many different things going on. I mean, if we actually look at everything, I mean, why would any of us be long if we read headlines, we look at under things under the economy, certain things, but hey, in a bull market, in a bear market, you know, you make, you know, 200% on Nvidia. Well, great. Congratulations, because that's a great ride. But yeah, do be prepared. Let's talk about that because it is the summertime. There are a lot of things going on underneath, below the surface, like Jack was alluding to, both opportunities to the upside and opportunities to the downside. So glad that you are here for such a time as this. So let's just jump right in and let's get started, Jack. Let's find out a little bit more about what is underneath. What are you seeing? What trends are you looking at?
All right.
Here we go. Got the cigar.
Yep.
It's
my breakfast cigar. I haven't even started on this thing yet. So
buckle up, buttercups. There we go.
All right. First, this is options on Nvidia. So this is today. This is going on right now. And
are you screen sharing?
Are you sharing?
I'm sharing it in my own mind. That doesn't count.
We're trying to pull it out. We're pulling it out.
Okay. All right. Let's see. How's this?
There we
Now
go.
we're talking.
Okay.
Nvidia.
So we got the stock here is 435. It's up 8. Now, my trade in this Nvidia this week is that I sold the 375 strike price put, and I bought the 372.50 as a little hedge, and I made my net credit there. Now, I don't think I'm going to have the stock put to me at 375. You know, it's just been on a tear, and that's all fine and well. But it's this stuff that it blows my mind. This is a $5 strike price on Nvidia. Right, got a little bit of open interest, but these trades, these hope happening today. What would be? Is this guy on the sell side or the buy side? I don't. It just blows my mind. Look how far out of the money this is, and there's still action in here. And you know, I'd love to have even Tony Saliba. I don't even think he can explain it. But this volume, this far out of the money, and then you get to like right at the money. And then look at how the volume is even larger than the open interest.
Are you looking at puts or calls, Jack?
First, I'm looking at calls. I'm going to scroll down and look at puts. But right here at the 430 level, we've got 35,000 at 435, 55,000, 440, 60,000 contracts have traded there. So now this is where we're talking about, is the tail wagging the dog? Is the options moving the stock right now, Roger, or is the stock still moving the options? From the way I'm seeing it, this is pushing up the price of the stock. The tail is wagging the dog here, and we'll roll down to puts.
And today's quadruple witching too.
Yeah, you got everything. Now, there's open interest. I don't know when this happened, but who's buying or selling a $5 put? Strike price put on Nvidia. You're going to have it. No one's going to put it to you at 5, and it's not going to go up in value. It just is so bizarre. There's 4,000 contracts here at $30, $30 strike price put on Nvidia, and you get back here to where you're closer to at the money, and it's just crazy. It is 46,000 trading, like mostly today. So Fridays in general have been crazy, crazy, crazy days for tech stocks and options on tech stocks. And I've never seen call winners win, but they're winning on Friday on the 0 DTE options that are going to expire today. You know, that's where the action's at on that. But I'm still not a buyer. I'm still a seller. And that for me is still working. But this is just crazy. This is what's going on underneath the surface. Like, you look at what is the Dow up, what is NASDAQ, what is S&P 500, what is that up or down? Hardly anything today. But this is unbelievable to me.
Yeah. And when you say you're still a seller, are you talking about selling option premium?
Yeah, I'm selling option premium all day long. You know, the good old fashioned covered call has been just one of the biggest money makers ever. So like the other day when I was on, we were talking about Cocoa. Remember that stock? Let's take a look at this. Cocoa was at like 25 or something. So just a little example. So I bought some Cocoa at 26, and I sold the 30 strike price call that's going to expire here later this month. But if I get called out at 30, I'll take that. I'll take the $3 plus the premium I receive for selling the call. And if I don't get called out, this thing, it's just been in a really great trend. This one in ELF, as we were talking about before, ELF, right? So that's what I got going on.
That's excellent.
And selling, I'm going to do a special thing tomorrow on if anybody wants to show up, a little special class on how to rake in some cash.
Oh, we love to rake in some cash. Yeah. Tell us a little bit more about that. Yeah. So you're going to be talking more about how people can do this selling of the premium, of the option premium, both puts and calls, and bullish and bearish. Or
bullish and bearish. Yep. So I've been doing it for over, I don't know how many years now with Google. And one of the things that's amazing about that is back then you had to have $250,000 in Google because you needed 100 shares, you know, just to do one contract with it. But now that it's split and the stock is behaving with a little bit of volatility, this is like a dream come true to start with. And I'm also going to give away 3, maybe 4 other stocks that they can do this on. So I can't wait to do it. It's going to be a lot
And
of fun.
Amazon's also been behaving a lot better since that
A
split.
lot better. Yeah, a lot better. Just wake up, man. The thing was like just a sleep. And
Yeah.
I can't stand that. I want them all bouncing all over the place, you know.
Oh, that's great.
That's
Well,
when I like it.
perfect opportunity to get in with Jack then. Tomorrow, Adam has posted that link there. You can register for it. It's 1:00 p.m. Eastern time tomorrow. Perfect. You know, we've got the 3-day weekend, so you'll want to be filling your brain with some really powerful content so you can be prepared to trade this market. I mean, we just got the best poolside stock market advice of the year right here from
Right
Jack.
here, baby. Don't forget it.
That's right. That is really good. So I think this is very timely, Jack. Thanks for sharing it with everybody. It'll be very valuable for all of you to make sure that you attend that with Jack there tomorrow. So any other ideas, any other tips that you have, Jack, for people as they approach? I mean, because it's true. That's like,
Yeah. Use a market driven approach. You know, I always like to look at what is, I'll just show you here. Like I use Trend Point software, but you can use anything to just get an idea of what the trend is. So I like to look at a 6-month trend on the S&P 500.
yeah. So say, Jack, when you say a market driven approach, what exactly do you mean by that?
What I mean by that is we always want to plan our trade in the same direction as the broad market, so that the broad market is doing all the heavy lifting. Too many times I see people have a strategy and it's like they're trying to jam a square peg in a round hole. They're not taking into consideration what the broad market is doing. They're just trying to jam their strategy in. And that doesn't work. What does work is when you plan your strategy in the same direction as the broad market. So for example, if the broad market is bullish, I like a bull put spread. If the broad market is bearish, I want to find a stock that I can pull off a bear call spread. So I always want to use the broad market as like the engine that drives the train. And I think that really helps people increase their accuracy and with their planning. So like for next week, the S&P is looking bullish. Then you look at DIA. That's not great, but it's not terrible, you know.
Not looking all that great.
It
looks like watch out below.
Look out below, baby. They're going to throw a piano out of a 20-story window right there.
Oh yeah.
And then, but the QQQ, for years, it was lagging the other two. Now it's clearly beating them. And you have your best market conditions, I believe, when the QQQ is leading all 3 major indexes, because look at this, is beautiful. Also, again, looks like it's ripe for a little pullback, but there's a lot of money made here recently.
Yeah. Gotta trade with those trends. What's the best?
So that's the thing, market driven approach. That way you can plan your initial trade. So like if the broad market was bullish, you'd be more of a buyer than you would be selling short, you know, kind of thing.
Question for you, Jack. What kind of time frame, when you say like bullish, like if the broad markets are bullish, what kind of time frame are you looking at when you say bullish?
I look at a 6-month chart all the time. To me, that's the best one.
Great. Perfect. All right. Very concise information there. Yeah. So make sure that you get hooked up there with Jack, get LinkedIn for his event that's going to be tomorrow at 1 p.m. and he's going to cover a lot of detail. I was listening in on some of the education and trade ideas that Jack has. Boy, they are phenomenal, and he gets the best feedback from his students as far as like, you know, being able to really understand what he's talking about there. So I highly encourage you to go be part of that at 1 p.m. tomorrow. So
it's going to be a lot of fun. I'm going to show you where the money resides.
There we go. That's why we're here. We trade to make money. That's bottom line. There's no other reason. So excited to hear more about that, Jack. So anyway, well, let's keep moving into Scott. Let's find out a little bit more from you. What are you seeing that is trending? How are you finding these trends? How are you looking at it? How are you trading it? How are you preparing?
Oh, so much to cover. Let me share my
A
screen.
little time.
Yes, I'll stop others.
Yes,
Okay.
there you go.
It's
And
my
there will
little-
be a replay. Yeah.
Okay, slideshow. from the beginning. Should be good. How does that look?
Beautiful. Looks awesome.
Nice green background.
Love
Well, keep in mind,
Color of money.
it's color of money.
Yep.
Keep in mind that the way that other people look at it, the way that Jack looks at it, the way that Roger looks at it, I love those ways. There's not one way to trade, believe me. Anyone who tells you there's only one way is probably pulling your leg. There are a lot of different ways. There are people who read the tape. There are people who look at market internals. I love all of them. But what I'm going to talk about today is kind of the opposite of all that. This is very slow, very deliberate. It's not, if the market goes down, then you just stand aside and you wait. It's a very, very patient way to look at the market. And if that's not for you, then don't do it. But there are some very interesting perspectives when you keep moving out longer time frames. So anyway, keep that in mind that this is a very slow moving. You'll have days or weeks to act on these ideas. And everything is based on, if people have seen me before, is this Stan Weinstein stage analysis. And what I'm looking for, to answer your question, is two things. Again, very slow moving. This is a weekly little graphic. This is the 30-week moving average. Everything's moving pretty slow. I'm looking for stuff over here in stage one, getting ready to break out. Maybe it's fallen, or maybe it's a brand new stock, which I'm going to show in a second. But it hasn't really done anything. It's gone down or it's gone sideways, and then all of a sudden it explodes above the moving average. Very, very interested in that. That's where I go to find stuff. But I also like to see this happen. Say, I don't know, after a bear market, right? You see a lot of stuff like this. I love this. Now, trading the way I'm talking about, you may not have a trade tomorrow, but you might have a trade in a couple of weeks, and you might have something that moves quite a bit. So keep that in mind. This is either a go or no go. I'm not worried about shorts when you talk about trading this way. I'm worried about getting in long and trying to get big wins over a pretty significant period of time. Now, I took that, as you know, and turned it into a monthly chart, right? So this is now that same graphic in the real world with Apple. It's an older example back in the .com, but you can see it applies, right? It goes up, it goes down, and then it breaks above the average again. So this happens in the real world, which is why I like to look at it like this. And here's Tesla, right? It goes, and then we're somewhere here. I'll give you the updated Tesla, but I'm just showing you this pattern plays out over and over and over again. But again, it's super patient.
What
Now,
moving average are you using on that monthly, Scott?
Yeah, it's a 12-month simple moving average. Now, as I said, I'm a rule follower. I'm an algo trader. So I get in on 2 consecutive closes above the 12. So it has one close. It could be if you want to be a discretionary trader, but this robotic way to do it is 2 consecutive closes above. And then I get out when it closes below the 12. So get in on 2 breaks above the 12 and get out. Are there better ways? Sure. But I'm just showing you, so simple, so boring, right? And if you did that on a fast moving stock, as I showed this last time, $10,000 of stock would turn into 170,000 if you did this on Tesla. That's all play money, and it's just for education and entertainment. But just to show you, if you follow the rules, sometimes you can make big numbers. And to validate, before I give you some recent examples, here's the SPX doing that same thing on the monthly. And this is updated through June 30th, which hasn't happened yet, but it's the month of June 30th. And you can see that this gradually goes up over time. So looking at it this way makes me feel comfortable. Again, it's calm, it's not frenetic, but it gives me the confidence that, well, long-term ideas can work out in the long term. So now you asked me specifically what I'm looking at right now. I already said I'm bearish, and I totally am. And if the market turns around like I think it's going to, then we'll be talking a few weeks from now about setups. We won't get them right away, but that's fine with me. However, if for some reason this thing keeps going up, I am super interested right now in IPOs, or newer stocks that are brand new in the last 2 years. The biggest moving stocks in the history of the stock market are usually within 8 years, according to the studies, or even 2 to 5 years. So this is actually what I'm looking at, is much or more than anything. IPOs. Now, How do I identify them? Here's what I do. You can just Google IPOs, recent IPOs, and then put them on this long-term chart. This is the monthly chart. And all I want is to watch it trade until the moving average just shows up on the chart. Well, it'll show up when there's enough data, right? It's not magic. Once I see the line, so I'm waiting several months for this IPO to do whatever it wants to do. As soon as it shows up, I want 2 consecutive closes, and then there it goes. Trading IPOs this way, and the research I've been doing, is crazy easy. And you catch stuff, right? So PANW is a famous IPO, and that's how I would look at it. Schwab, back in the day, it was an IPO. Moving average showed up right around here. I waited for 2 consecutive closes, and then it goes. Then you keep watching them and you get another one. Amazon, the moving average showed up after it was new back in the 90s. It was already above. So you draw a line over the top of a recent high and trade that on an IPO. Like using these long-term charts, you can catch these newer stocks, but you're not really caught up in the day-to-day news. And here's Tesla. Moving average showed up after its IPO. Oh, it's a loser, because sometimes things lose. And then you got the 2 closes and you got that move right afterwards. And Tesla's continued to be good, obviously, right? So that's what I'm looking at. You want a few recent examples? Do we got time? I don't want to cut out Roger.
Yeah, give us a couple of recent examples.
Okay.
And as you're doing that, let me just remind everybody too that you were on Ask the Pros Premium. I think it was last week. Gave a lot of great detail on those IPOs. Highly recommend. If you are not part of Ask the Pros Premium, that you follow that link. Maybe Adam can drop it in there again, and you sign up. It'll be worth the price of admission for sure. All of the content, and with what Jeffrey Turnmeyer did today, whew, it's just really, really awesome stuff. So keep going.
If, again, this is either after the crash that we think is coming, or if it happens to happen. Here's Tesla, by the way. I'm going to move you over there. We have 1 close. You know, that big move in Tesla, we've had 1 close above the moving average. Tesla's a month away. Just thought I'd follow up. Here are some IPOs quickly. APLT. This month was actually an enter. Therapeutics, this is a crazy stock, right? So you don't want to put your whole life savings on it, but if you wanted to, put a little bit of money. This is actually, it hasn't gone anywhere all month. So this would be a possible trade. Palantir is going to be a trade at the end of the month. You see it fall. We're on our 2nd consecutive. Yes, it's moved a lot, but IPOs move a lot. So Palantir is ready to go at the end of the month. Roger's favorite. I love to hear Roger talk about ARK. I could listen to him talk about ARK all day. This is our 2nd close. I don't want to trade ARK. I think it's a bunch of degenerate stocks, like Roger says. But guess what? It's a trade at the end of the month, which is crazy to me. D-Dog, right? This doubled after the first IPO, and we're about ready on our 2nd close. And here's Frog. Just found this. I was reading IBD, just minding my own business, Investors Business Daily. This has 400% earnings growth. You know how Investors Business Daily loves earnings growth?
Yeah.
They're projecting 400% earnings growth, which is what they love more than anything. And we're in our 2nd close. This will be a trade in a couple months. So
yeah, makes me want to jump at that stock.
I know. I just got that. So that's a bunch. I mean, there are a few more out there, but I'm just saying, if you just pull up a chart of a brand new stock, wait for it to close. I mean, sometimes you can catch these big winners.
That's excellent. Yeah, great. I didn't get a chance to catch all of those stocks either. Anthony, I know it would be nice to have those in the chat, but it will be on the replay. And there's even more. Anthony, you got to go. If you're not a member of that Ask the Pros Premium, go get there, because there's a lot in there too that he shares. So let's keep it going, because we need to find out more about what's happening in the market. And do you have anything else there to share? I didn't want to cut you off, Scott.
Oh, I'm all done. That was fun. I'm ready.
It was a lot. So Roger, I want to find out from you more about what you're seeing deep in the belly of this market. And you have some information too about, like, fund managers. And I'm interested to hear what you have to say about ARK, because you've been saying some things. I've been listening to you about, hey, when ARK does some things, because a lot of us have a lot of the same feelings. But tell us, from your perspective, what's going on with seasonality, what's going on with the market. Tell us everything.
Absolutely. Let me just pull this up right here to make sure I have everything on there. Matt, do me a favor. Would you please give me this doc that I'm printing out right now? There should be some in the printer, Matt? Thank you. Sorry about that. I just wanted to get something get going. And by the way, let me share my screen. Funny enough, I was just thanks. I appreciate that. Funny enough, I was just looking at Kathy Woods as we were talking here, and she never fails to disappoint. Matter of fact, look at ARK Fund right now, still in that range. By the way, I drew this last year, and I told folks the market was going to bottom out here. People were laughing and throwing stones in my face, and it's been a year. And this is literally, I drew this a year ago, and I haven't changed anything. Armand says, yes, you did.
Yes, I remember it too. Yeah.
Yeah, and nothing has changed. And I do think these degenerate stocks are going to lead us out of this, but we're nowhere near there. And I'm not going to repeat what Jack said, but basically everything he said about the rally being very narrow, being driven by just a handful of stocks, it's all very true. You can't trust that at all. So first of all, I want to show you guys something interesting, and this is the Dow Jones. And the Dow is, it's called Dow Industrial for a reason. It's not a blue chip sector. It's not made up of blue chip stocks. And you could see that right now the Dow has been pretty choppy for the foreseeable past. And this thing right here is giving me a big red flag, because we're showing divergence in the RSI. The RSI, to say it can't go higher than 84 is an understatement. It went up to almost 100, and it can't even get to the 80. This is a short-term RSI. So to me, this is overbought. Now, interestingly, I showed this to you guys last week. I showed the industrial sector, and I made an interesting comment how the industrial sector looks almost identical to the Dow Jones. It doesn't look all that different. It looks almost like we're looking at the same thing. But one of the things about the industrial sector is that we can look at momentum levels very clearly here. And industrial momentum levels right now, I want you guys to see this. I mean, it's like we've been at these levels in the last, let's see here, how many times we've been here. This goes back to, this is about 8 years, okay? In the last 8 years, we've been above this line once, twice, 3 times. So anybody who wants to be a buyer of industrial stocks or basic material or other blue chip stocks is not thinking clearly right now. This is not a time to be a hero. Other sectors that are just as overbought right now are, and I'm not even talking about tech. Tech is just, it needs to be shot. But other sectors that are as overbought right now are, where's my basic materials? Here it is, basic materials. It's also really overbought. And in addition to basic materials, look at utilities. Very overbought. So the blue chips are becoming just as overbought as the technology stocks. And when you're seeing that and you're not seeing any follow through from mid caps, that's a big red flag, like a big red flag. So there's a lot of vulnerability right now in sectors that looked pretty good and pretty ripe about a month ago. Now, with that said, I am seeing more upside potential in consumer staples, which I'm grossly long right now. Looks like there's more upside there, and it looks like there's more upside in healthcare stocks. And those are the two sectors that typically stay firm while the rest of the market starts coming down. So it actually makes more sense. This can go up another 10%, 15%. It's not overbought yet. So the stock market is getting a little bit hot, a little too hot in the very short term. And I think we're going to see it come down. Now, techs, forget about techs. I mean, if you look at infotech, look at the 200-day moving average, look at the 50-day moving average, look at the 20-day moving average. I mean, this thing is so hot.
Yeah.
And the 200-day moving average, we really have to pay attention to, because that's like a very long-term basis. And when you see tech stocks go from here to here in, let's see here, how much time is that? August, September, from September till right now, that's not normal. That's very unhealthy. Matter of fact, even if you look at the 50-day, mean, no matter where we look, it's going to show us the same thing. But these are just not sustainable levels for the long term. They're not realistic. Let's see, 1 times, twice, 3, 4, 5, 6, 7 times. So once a year, in the short term, we go to these levels. So again, not sustainable momentum, not realistic. A great time to start buying up options. We are the shortest we've been in the history of Wealth Press right now. I have, let's see here, 3 out of every 4 positions I have are short right now, just to give you some idea of what we're looking at. So that's the broad market right now. Now, what does the biggest hedge fund think of the market right now? Now, the most money in this country is being held by BlackRock. Okay, BlackRock says this week, tight labor markets are making core inflation sticky. BlackRock expects the Federal Reserve to keep rates elevated for longer than expected, as inflation remains above the Fed target level due to wage pressure and tight labor market. We think tight labor markets are driving wage gains and making core inflation sticky, the world's largest asset manager said this week. In particular, U.S. lacks enough workers to fill jobs, while Europe, workers have left the private sector for public sector. Tight labor markets could squeeze corporate profit margins or force companies to trim workforce to maintain profits. They are looking at more bonds, and they're looking at GDP to dip into a mild recession. So they're not looking good. So things are just not looking as great. Now, it's not all bears. There are some interesting things going on right now. So I don't know if you guys have good memories or not, but about a year and a half, maybe 2 years ago, I started talking about a brand of shoes that my wife has been buying like there's no tomorrow. And I told everybody, and I said, unfortunately, you can't invest in this shoe company, but you can invest in their parent company. And the name of the company was Hoka's. And I want to read something to you. Decker Outdoor, which is the company, you guys probably remember. Remember, Celeste, I talked about it a few times, more than once, about Hoka shoes.
Yeah.
Yeah. So let me
say Crocs, but yeah.
No, we're talking about Hoka's, and I'll tell you why we're talking about Hoka's right now.
Let's find out.
Because they announced Decker Outdoor, which owns Hoka, which bought them from a very small French company. And I remember when it happened, and I made a big deal out of it on this show, that they launched their most extensive ad campaign because Hoka became a $1 billion brand last year. The global brand market for Hoka will span owned media, out of home, CT, digital, paid social media. Campaign will include a 60-second film, actors, entertainers. But listen to this. Hoka's revenue for fiscal 2023 increased 58% year over year to $1.4 billion. To mark the 4th consecutive year, Hoka has delivered revenue growth above 50%. In Google search interest, Hoka is at an all-time high right now. So 2 years ago, I told you to keep an eye on this company, and this company is doing really well, and it's becoming Decker Outdoors' biggest brand by market cap. So keep your eye on Decker Outdoors.
Nice.
Now, with that, you remember that I was talking that stock up for a while there.
Yeah, that's crazy. That's good stuff. Always good stuff you're bringing to us, Roger.
Now I want to show you guys the seasonality for next week. This is seasonality for the next week. Now, Monday's a holiday, and usually when we have a holiday on Monday, it becomes a very distorted, I call it fragmented week, and I'm expecting a fragmented week. And typically when you have a fragmented week, it doesn't tend to favor the bulls. Now, the NASDAQ is really nasty next week right here seasonally. Now, interestingly, communications is up. Tech is totally out of whack. But even look, basic materials, industrial, utilities, energies, I mean, financials look like they're okay. But honestly, this is a nasty market next week. And because it's a nasty market next week, Uncle Roger is going to give you guys.
Hey, question for you,
yes.
Roger, back on your seasonality there. Does it kind of shows, it looks kind of like a gap down, if I'm reading that correctly.
No, it doesn't really gap. It doesn't really gap. There's no gap. I mean, it doesn't really show gaps. It just shows how the last X amount of years on these days the sectors have performed, but it just looks negative. It
Yeah.
looks really, really bad. It doesn't look good. Usually we have this up, this down. It's a little mixed. It's that. Everything is bearish. All the sectors, all the indices. XLF looks okay at the end of the week. XLY looks okay at the end of the week, but this is barely. I mean, this is 0.2%. So next week, I'm getting a feeling that's going to be very choppy with some downside moves. And on that note, I want to give you guys some shorts that look pretty good right now. What do you guys think about that?
Shorts for summer sounds good to me.
All right, let's do that right now then. Let me just take this off my screen, go back here, and here are my shorts. First one is Match. These are really crappy stocks doing really crappy things, by the way. Hitting the 200-day moving average, about to back off, way overbought. I think it's going to go down from $42.50 all the way to $31.50. The next one is WAB. The stock is overbought on a longer term basis here, and I think it's going to come south. It's right now near the 103 level. I think it's going to go down to the 92 level. These are all within the next 8 weeks or so. GPC. Matt, my assistant, also does not like this stock. Hey, Peter, how are you? Blair, not Peter, Blair. Here's another one. Genuine Car Parts. Don't think it's going to go much higher. Think it's going to go down to about 145, 146. Next one is JKS. This is especially a nasty one. I mean, this thing, if anybody thinks this thing is going to skyrocket, let me tell you, I've got other plans for this stock. I think it's going to go right down. It's overbought, going to go down right back down to the $40 level. Next one is A. Stock has not been doing anything really that great this year. The long-term trend is nasty. I mean, Jack, would you buy any of these stocks with your money?
No, I wouldn't do that at all.
Exactly.
But I would, there's a lot of great bear call spreads in these things.
Exactly. So I would sell this right around here. I don't think it's even going to go high enough to fill the gap. I think it's going to go down all the way to the 113. Most of these stocks have about 10 points or more in them. And last but not least, pizza. Papa John's pizza is just not, Papa John's is just not killing it. And the way it used to, I think it's overdone. I've been watching the stock for a while. I think it's going to go down about $6 or $7. I think all of these stocks, every stock that I mentioned, WAB, GPC, JKS, A, Pizza, and Match are all going to test the recent swing lows over the next couple of months or less, probably a lot less. Now, folks, before we depart for today, I hope somebody posts a link. I have a class with Chuck Hughes. It's going to be a very cool class, and it's about how to make money without holding positions. In other words, you're only holding a position for less than a day. You're not day trading, but you're holding a position for less than a day. You're getting in at the end of the day. You're getting out the next end of the day. It's like the show 24. It's going to be very, very exciting. Can't wait for you guys to check it out. Don't want you guys to miss it. If you haven't seen it yet, go to that link and check it out. And that's all I've got for you guys today. Nice, short, and concise. And we'll get you guys enough time to get into the room and check out the 1 p.m. session.
Oh yeah, cannot wait to get that with Roger and Chuck together. I mean, you got two very powerful minds coming together, and you got Chuck's like won these trophy trading trophies, 10 times? I mean, just
10-time heavyweight trading champion, that Chuck. He's very frisky, that Chuck.
He's great. He's great.
Well, and what I love about this too is that it's an in and out 24 hours, but it's not day trading, but you're still getting the same types of results and getting into that market, understanding what's going on in the market. And what better time than right now when we have the ups and the downs. We've talked about it all hour today, what's going on in the market. So this is perfect. Roger, thank you that you and Chuck are bringing it.
Yeah, and Celeste, you don't need a large account for this. You don't need to know anything about options. You don't need to know about complex option strategy, strangles, iron con. Forget about all that. You just buy an option and you sell it the next day. And you even get a signal when to sell it too. And I mean, it's always 24 hours, but you get a signal as well. So Chuck just implemented Telegram alerts, so you could get it anywhere in the world instantly, just like that.
Yeah.
So can't wait to, folks, go to wealthpress.com Friday. Isn't that like the best link? And we'll see you guys there. And I really, really appreciate it. Don't miss out on this class. A lot of people, every time people watch this class, they see something new every time. So it's it'll be very, very interesting.
I love what you just said too. It's, you know, great for newbies and beginners. It's great for very advanced traders too, because we all like to just make money, you know. So it's a great opportunity for everybody. I love what Q is saying there. You know, nephews just getting started is a great way. What better people can you learn from than Roger and then Chuck when you're new getting started in this? So fantastic and easy to follow. The link is posted there. You can go click on it right now, go get ready, because we're going to tidy things up here for Ask the Pros. We've got Jack's event tomorrow. That's going to be powerful. A lot of great education. Bring your nephew there. Bring everybody there. It's going to be really, really good. We've got Roger starting at 1 o'clock. Just a lot of great information. We've got recordings from Ask the Pros Premium. We've got recordings from today. We are trying to prepare you for this craziness in the market. And just like Jack said, you know, we are not afraid. And I love those terms you coined there, Jack. We'll just finish on those. What was it? The fear of getting in.
Bogey
Bogey.
and FOMO. Yeah.
Bogey.
All right.
The battle of the minds, right? The battle of the fears. Fear is at its all-time high.
That is right. Fear is at its all-time high. And that's why we come here week after week. You've got that FOMO, fear of missing out. A lot of people are feeling that right now. The little ladies, I put myself in that category too, at the pool are talking about AI. That's
the best indicator. Best indicator.
Indicator. I don't want, I'll let you determine what that means for the market. You've got other things, you got movers and shakers, things, you know, but the fear of getting in is a huge one. You know, are you afraid to go short? Are you afraid to go long and market that looks like it can't go any higher? Let's cover some of those fears, cover them with Jack and Chuck and with Roger, see how they tackle all of that, because they are making money. That's why they're here. That's why they've earned this spot on this show. So
thanks, everyone.
All right. Enough said. Thanks, everyone. Have a great weekend. Any final
Thanks,
words?
Celeste. Thanks, Scott. Thanks, Jack. Bye, guys. We'll see you. Have a great long weekend, everyone. Bye.
Yeah, it's going to be a good one. All right.
Bye.
See you soon.
It's gonna be great. Follow the